Hey guys, welcome to ITAC. My name is Favor Tawo, your host on top this very program, and we're about to give you guys a lot of technological tools and topics for today to diffuse. So stay tuned and don't go nowhere.
In the heart of Ondo State and Nigeria, there is a place where innovation thrives and dreams take flight. Welcome to Information Technology's hub and signature. At ITAC, we're more than just a technology hub. We're a nurturing and synergistic community that fosters the creation and support of information technology products and services. Here, people from all walks of life come together to gain digital skills and access top-notch infrastructure, turning their ideas into successful digital ventures. Entrepreneurs find a home at ITAC, where they can transform their ideas into successful digital ventures. With the support of our vibrant community, we strive to establish an ecosystem that nurtures creativity, collaboration, and entrepreneurship, allowing individuals to flourish and make a meaningful, long-lasting difference. At ITAC, we embrace the convergence of technology, creativity, and business, fueling innovation and driving digital transformation. Our commitment to excellence, innovation, and partnership supports organizations and individuals in realizing their vision of making a lasting impact on the digital landscape. Join us at Information Technology Hub and Synergy, where innovation knows no bounds and dreams become reality.
Welcome back, guys. Today's topic is smart money and financial technology. Yes, you might not really understand what that means, but we all know what FinTech is, isn't it? Yes. So yeah, you can also call it financial technology. So I won't talk too much as regards that. We are going to tell you what it is and how it is beneficial to each and every one of us. Please learn a lot from this very segment.
It's fast become one of the big buzzwords in business and technology. It's one of the hottest properties to invest in, and you can be sure it's only going to get bigger and bigger. But stick with us until the end and you'll see how a lot of people have no idea what the word FinTech even means. You don't need a degree in computer science or finance to figure out it's an abbreviation for financial technology. But when it comes to FinTech, whether you're in the dark or well clued up, we thought we'd shed a bit more light on this hot topic. Number 1. Traditional banks are worried about it. And with good reason, too. That's because until a few years ago, banks had a tight hold on pretty much anything we did involving money. And being the huge, bloated dinosaurs that banks are, there wasn't exactly much incentive for them to innovate or be competitive. Fast forward a few years and a few leaps ahead in digital technology, and it was time for smaller, more agile players to make an entrance. You got it, FinTech. And in the last decade, they've been giving banks a real run for their money. As innovation expert and FinTech VC Arvind Sankaran put it, we're witnessing the creative destruction of financial services, rearranging itself around the consumer. Who does this in the most relevant, exciting way using data and digital wins. So the more you see the word FinTech cropping up in your news feeds, you can be sure the more headaches old-fashioned bank managers are getting. Number 2. The term includes sectors you probably didn't think were FinTech. Put simply, FinTech companies unbundle all the different types of financial transactions that banks traditionally do. And as each FinTech tends to specialize in just one area, they focus on doing it in a way that's efficient and streamlined and as user-friendly as possible on a digital interface, and at a low cost to the consumer. That includes platforms that are already fairly obviously FinTech, like platforms that let you make payments online or in stores, Square or PayPal. Platforms that let you trade stocks, like eToro or Robinhood, and anything digital you use to apply for a loan. The FinTech label also includes cryptocurrencies and the crypto trading platform Coinbase, and the so-called neobanks like Chime, TransferWise, or Revolut. But there are other players you may already be familiar with but hadn't thought of as FinTech. Crowdfunding is also considered FinTech, so it includes the likes of Kickstarter and GoFundMe. And if you make or receive payments via Patreon, you're also using FinTech. Or if you've raised money or donated money via online charity fundraising platforms, that's FinTech too. And there's FinTech specifically for Medicare. One example is Oscar, an American health insurance company that uses IT to shake up the healthcare system, making it easier and more transparent to make medical claims, all at a reasonable cost. Number 3. It's lifted millions of people out of extreme poverty. One thing that FinTech does a great job of is bringing financial services to people who couldn't access them before. Often that means people who didn't have a regular income or a permanent address, and FinTech's allowing them to build wealth and escape the poverty trap. A case in point is M-Pesa. It was released in Kenya in 2007 and basically transforms your smartphone into a bank account. It allows users to make and receive payments, make online deposits, all in a secure way. And it gets credit for having reduced crime in a society that used to be mostly cash-based and prone to theft. In fact, since M-Pesa was launched in 2007, it's raised 2% of Kenyans, around 200,000 households, out of poverty, as well as many other people in different countries throughout Africa where it's also used. And we think that all of this means FinTech deserves some serious kudos. Number 4. It's revolutionizing the loans market. Looking and applying for a loan is a great example of how traditional banks were drowning in bureaucracy and how FinTech has shown us all it can be improved and streamlined for a lower cost. Now it's possible to find a whole range of apps and websites that help you compare prices of credit card loans in a way that banks didn't used to do. That includes peer-to-peer lending platforms like Prosper, Marketplace, and Lending Club, sites for business loans like Cabbage and Lendio, and FinTechs that let you apply for mortgages, which take traditional brokers out of the equation and approve loans faster. And in 2016, American FinTech SoFi, which helps with student loan refinancing, became the first online lender to get a AAA credit rating. Number 5. They could make traditional credit ratings obsolete. Anybody who's ever taken out a loan knows how your credit rating is the holy grail when it comes to being able to access money. A bad credit score shuts off all kinds of opportunities, and it's difficult to shake off. This is something else that FinTech has been busy disrupting. That's thanks to FinTech lenders like Affirm, which offers loans to people with bad or no credit ratings and also helps them build up their credit rating. Or Upstart, which uses totally different data than usual, like employment history, to determine how creditworthy you are. And all this means that soon enough, we could be seeing the end of credit ratings as we know them. Number 6. Cybersecurity is still a big concern. Of course, it comes with the nature of FinTech companies that they would hold huge amounts of sensitive data, and there are high risks if all of that gets stolen. And along with all of the good news around FinTech, it's worth noting it's not all rosy. We do need to be careful. Figures from last year show that 27% of FinTech companies have experienced a security incident, and 29% aren't sure because they haven't checked. With more investment and more transactions being made through FinTech, this is likely to improve in the future. But it still goes to show just how seriously we should be taking cybersecurity. And while we're on the topic, we're going to take the opportunity to strongly recommend that you have a VPN. Just one click makes your digital footprint anonymous. It keeps prying eyes away from your online activity, and transactions are more secure. That's as well as other perks, like letting you access sites and content that wouldn't usually be available in your region. Here at ALUX, we use NordVPN, and right now you have an amazing offer, especially for our community. Just go to alux.com/VPN, and you can get 2 years worth of VPN services for only $89. That's a 68% discount. ALUXers, make sure you have yourself covered when it comes to online security and make the smart choice. Number 7. Investment in FinTech is going up exponentially. With so many movers and shakers of the last decade being FinTech, this one shouldn't come as that much of a surprise. Over $300 billion has been invested in FinTech in the past decade, and according to Goldman Sachs, the market worth of all FinTech firms is $4.7 trillion. That includes investments made by big tech firms into their own platforms, like Apple Pay and Google Wallet, as well as the financing that's been secured by a large number of startups, which is about 12,000 FinTech startups across the world. Number 8. The word FinTech originally described the back-end technologies of traditional banks. The first time most of us heard the word FinTech was probably sometime in the last decade, but the first recorded use of it goes back a lot further to 1971. It was originally used to describe the back-end technology used by banks and big financial institutions. Kind of ironic, seeing as now we use it to talk about their competition. And the first FinTech that really went global is a company we all know well, PayPal, which launched in 1998 by one of our favorite people here at ALUX, Elon Musk. Although it wasn't until quite a bit later the term FinTech was used more widely. Number 9. It's a huge user of machine learning. As FinTech offers cutting-edge products, it stands to reason they use the most cutting-edge new technologies and are some of the biggest users of them, and none more so than machine learning and AI. One of FinTech's most famous uses of AI is in so-called robo-advisors. Now, sure, they might sound like armor-clad law enforcement agents from a dystopian future, but the word actually refers to algorithms that automate investment advice, and basically they do the same job as financial advisors, but at a lower cost. And another way FinTech companies use AI is in their cybersecurity to fight online fraud. They do this with computer programs that use information about your payment history to flag up transactions that are outside of the norm. Number 10. And other new technologies too. Yep, FinTech uses all kinds of new technologies, like chatbots, which assist customers with basic tasks and cut down staffing costs, or an area called predictive behavior analytics, used in car insurance apps like Root Insurance. Basically, the app tracks a driver's movements and assesses their driving skills, and adjusts the premium rates based on their performance behind the wheel. And of course, blockchain, which was developed specifically to record transactions of Bitcoin, and is closely connected with one of the most talked about areas of FinTech, crypto. Number 11. They can improve your spending decisions. In case you're one of those people who finds it difficult to make the right decisions when it comes to money, we've got good news for you. It could be FinTech that saves the day. That's because one area of FinTech that's been getting lots of users are personal finance apps. With apps like Mint, Money Dashboard, and Credit Karma, you can use budgeting functions to help you spend less and hit your savings goals. And some apps use gamification to add some fun into saving, which is not usually known as the most fun activity to do, as practical as it may be. And a lot of research shows that they actually work and help people save more money and feel more satisfied about their spending decisions. Number 12. The world's biggest FinTech is a subsidiary of Alibaba. For those of you who don't spend a lot of time in China, it might not be that familiar a name to you. But at the moment, the world's biggest FinTech company is Chinese Ant Group, valued at over $60 billion and with 10,000 employees. It also owns several major financial services, like Alipay, the largest online payment platform, Weibo, the world's third largest market fund, and a credit rating system, Sesame Credit. And if you've been paying attention, when you heard that one of these services is called Alipay, it probably didn't take you long to figure out that it's part of the Alibaba Group, which means along with Apple Pay, Google Wallet, and Jack Dorsey's Square, they're one of several FinTech companies that have a regular tech company backing them up. Number 13. Asia is the biggest consumer of FinTechs. That's not just in terms of the number of people using them, but also the percentage of the population. According to an Ernst & Young survey, China and India have the biggest FinTech usage, both with 87% of people regularly using FinTech, while South Africa was in the third spot with an adoption rate of 82%. Number 14. But the USA is the biggest producer. It won't come as much of a surprise that Silicon Valley has the highest concentration of FinTechs based there. But there may be a few surprises on the list of the world's top 10 FinTechs, especially if you weren't expecting to see any Baltic countries make the top 10. But 2 of them do, Lithuania in 4th place and Estonia at number 10. After North America, Asia is the second biggest home of FinTechs, with Singapore taking 3rd place globally.
Welcome to ITHAC Creative Productions, your ultimate destination for all your creative and digital needs. From captivating films to engaging content, we bring your stories to life with precision and passion. Our expert team crafts original content, adapts existing ideas, and creates powerful promotional videos tailored to your brand. Boost your online presence with our comprehensive digital marketing services, including video marketing, social media production, and targeted online ads. Capture every every special moment with our full service event coverage, ensuring your events are remembered forever. Bring your imagination to life with our animation services and immersive VR/AR experiences. Partner with us for insightful consultation and collaboration to achieve your creative goals. Visit us at www.ithac.org. ITHAC Creative Productions. Innovate, create, inspire.
Hey guys, welcome back. This is Tech in View. Yes, we're about to view that technological tool that is very, very interesting and is very, very good for each and every one of us to know. Are you ready? Because if you're not ready, I'm going to make everyone ready. Please watch this very one.
Everyone uses credit cards, and making transactions, whether mobile payments or credit card payments, has become easier than ever. In a few seconds, by a simple swipe or close to a terminal, we can make payments at a store. But today, we'll find out how secure these payment methods are and how they work. In the past, the most convenient payment methods were cash, check, or credit card. But with the evolution of smartphones, a new payment method has appeared by using the phone. Over time, to facilitate this payment process, digital wallets have been developed. A digital wallet stores the user's cards in one place and thus allows the transfer of money or financial transactions without the need for a physical card or physical cash. Basically, the user places the mobile device with the digital wallet next to a NFC reader and the transaction is completed. Let's see exactly how a digital wallet works. First of all, payments are made through contactless near-field communication or NFC between your phone or compatible watch and the payment terminal. Once connected to NFC, the user can see on the screen the preferred credit card or can select a specific card with which the transaction will be made. But how secure is payment by phone? Mobile wallet payment comes with many security advantages compared to a physical card when making purchases in a store. First of all, multi-factor authentication is very secure because another form of identification is needed, such as fingerprinting or face or eye scanning to allow a payment. However, the use of a physical card does not require additional security methods because merchants rarely require confirmation of the identity of the cardholder. Moreover, if someone steals your wallet, he can use any card, while with mobile payment, the thief must be able to unlock the phone and authenticate in the mobile wallet, which can be almost impossible, especially for mobile wallets with biometric identification. Although it may seem risky to enter card details on a phone, you should know that digital wallets are free of fraud. The data entered is encrypted and no one else can see it. This is possible because mobile wallets benefit from tokenization, i.e., the card number is replaced with a randomly generated number called a token. This security is lacking in the case of payment with a physical card. Consider paying the restaurant bill with a physical card, and a hacker can retrieve the card details from the merchant's payment reader. If you pay with your mobile wallet, this will be impossible due to tokenization. Advantages of using a digital wallet. With the help of a single digital wallet, you can have all the cards in one place. Security due to tokenization of the card number. Increased security due to biometric identification methods. Authentication in several layers. Payment is made faster. Tracking the mobile phone in case of loss or theft is easier than tracking the physical credit card. Advantages of using a physical card. Many merchants do not accept contactless payment because they do not have the necessary technology, so you need a card. You can always run out of battery on your phone, so if you have a card, you don't have to worry. Some ATMs do not support contactless, and thus you will not be able to withdraw money. Now we can answer one of the most common questions. Are digital wallets secure? Yes, card data is encrypted and tokenized, which makes it more secure than conventional payment methods. But don't just rely on your digital wallet because not all merchants accept such payments at the moment.
here to learn more about, digital skills and more.
Well, I arrived to this fair in order to foster my knowledge based on the digital community we have and also to make network.
It's out of the week, guys, and I know some of you might be wondering, okay, how can I save money? How can I invest money and do everything online in the comfort of my home? Worry no more, right? We've got you in this very place. So do well to download this app, and trust me, you will never regret that decision. Guys, welcome to App of the Week. All right, guys, welcome back. We've come to the end of this very program, and you know what? FinTech is actually very important and it's making waves. So do well to join while people are moving, all right? I am your host, Favor Tower. Please keep watching ITAC. Catch me same time, same station. I'll be very glad to host you on different topics. Bye-bye.